As people, we are very excited to know who is going to rule India for the next 5 years. But as investors and traders, we all have a very big moment coming in near term because the stock market is going to burst in only 2 ways after the election. Either it will break all the records and reach new highs, or the stock market is going to crash. Recently, Amit Shah on an interview said to buy the shares right now because after June 4, the stock market is going to blast. And on the exact minute this news has come on the television, the market which was falling for about 2 weeks suddenly blasted and reached its all-time high. Also, Modi on recent interview told that the post-election rally of the stock market within 1 week after June 4 will be so high that the Indian stock market participants will get tired. The pre-market rally in the Indian stock market was unbelievable. But now we will see what might happen to the Indian stock market after the results of Lok Sabha elections on June 4 is announced. There are many parties fighting to get the crown, but there are only 2 parties who have the most possibility to attain that. One is NDA, the ruling party, and the other one is India Alliance. Now we will see what history is saying about the Indian stock market after the election results. So in 2004, after Congress won, the market fell by 30% because the ruling party failed to form the government again, and because of that, new taxation rules may come in which might affect the market, and hence the market fell by 30%. So what happens is that until a stable government is formed and every rules has been set, the investors will not know how the industries are going to perform, and therefore investors will stay away from the market. We can see that in the graph here that the market fell from 2000 to 1200. Also we know that before the 2009 elections came the Lehman Brothers crisis, also called as the global financial crisis. During that period, the market fell by 65% from 6300 to 2200. But shortly after that, when Congress won again in the elections, the market sharply recovered and went on to reach new highs. We can see that in the chart here, the market recovered from 2200 and went on going up. During the 2019 elections, the market went up by 20%, and later on when the global pandemic corona came in, the market fell by 35 to 40%. We can see here that during corona, the market came from 12,000 to 7,600, which is approximately 35 to 40%. This is how the market has been reacting after the election results, and this happens only once in 5 years. And now in 2024, the Lok Sabha elections have come again, and what else investors or traders would expect other than the market going up or crash? We have seen the history of stock market after elections, but now we will see what might happen to the stock market after this election. For that, we will take 2 cases by considering NDA, that either NDA wins or NDA loses. If NDA wins, the Indian stock market may go up by at least 5 to 10%. Since NDA is the ruling party now, it have already given the standards for corporate taxes, GST, and also given the manifesto for the positive economic growth of the country. And also, it is trustable to a good extent since it is the ruling party, and with all this positivity around the global market, the investors from domestic and foreign level will invest in India and the market will go up. Or in the other case, if the India Alliance wins, we may see a very big crash happening in the Indian stock market. It's because they may change the corporate taxes and all other kinds of taxes, and by this event happening, there might be a very high instability in the market. With very high instability comes a very big loss of trust among the domestic and foreign investors and also the retail investors. And with all that coming, a very big crash in the stock market might happen. Or there might be something else interesting could happen, that if the India Alliance wins and it announces that it will reduce the corporate taxes to a certain percentage and also promises to reduce all the taxes, then this could be a positive news for the stock market, and the stock market may go up following a small downward moment since the ruling party have lost. What exactly will happen is a question that we will never know until June 4. So we will keep waiting until then, but we all have another question with us, that as investors, since we have invested a lot in the stock market, what should be our plan and how our approach should be in the market for the near term after the June 4 event. Before knowing this now, we will know what exactly is happening right now in the market. Ever since the parliament election approached, the stock markets are very highly volatile, indicated by the India VIX, the Indian Market Volatility Index. The only time when the market was shaken and put under pressure was during the Israel-Hamas war in October 2023, and when that time the market fell almost 10%. We can see all the stocks nearing all-time highs, and it's been a bull market ever since the corona crash. On the market's perspective, there are 2 big things that are currently happening in the market now. The first thing being India VIX going up, and the second thing, the FIIs keep on selling the stakes in Indian market. But what is India VIX? India VIX is the volatility index of the Indian stock market. India VIX tells us that in the near term, how volatile the Indian stock market is going to be. So positive India VIX indicates that the market is going to be very highly volatile in the near term, or also we can say that it depicts the expected market volatility for the next 30 calendar days. So as we can see here, the India VIX is reaching its 1-year high, and this confirms us the market is going to be very highly volatile in the next 30 days, and India VIX is going up now, which indicates a big movement is going to happen in the market. To put it in simple words, we can say that if the India VIX is going up, then the volatility of the Indian stock market is going up and vice versa. This rise of India VIX shows the fear among traders or market participants that the expected volatility is more now, and currently that fear among the market players is coming from the outcome of the ongoing Lok Sabha elections. And the second big thing that is happening is the FIIs taking stakes from the Indian stock market. FIIs are also called as foreign institutional investors, are a very big part of the Indian market. FIIs are very high net worth foreign individuals and also the foreign funding companies who invest in the Indian stock market. They have a very huge amount of money and they invest in all global markets. And also in the Indian stock market, sometimes they will decide if the market will go up or down, because at the end of the day, the market is going to go up or down depending upon how much money is coming into the market or going out from the market. But why are we talking about it now? It's because on the month of April and May, the FIIs were the net sellers in the Indian market, where they have taken out 35,700 crores in the month of April and taken out 33,539 crores until this point of the time in May. As the Lok Sabha elections are going on in India, it is not guaranteed that which of the party is going to lead India for the next 5 years. So if the ruling party for the next 5 years is not decided until now, then the investors are not sure about how the taxes are going to be implemented for the industries. But is this event happening right now tells us that the ruling party is going to lose? We cannot conclude that. The only reason about FII is pulling out money from the Indian market is because of the uncertainty in the Lok Sabha election result, and this does not mean that the ruling party is going to lose. So the FIIs might be thinking in a way that we will take the money out now, and once the election results have been announced, then we will be sure about how the taxes are going to be, and that is why they are taking the money out. So just because FII taking money from the Indian market mean that they don't have trust on the ruling party would win. It may be because there should be a stable government in a country to invest in. So to put everything in conclusion, a stable government forming, that is the ruling party winning again in the Lok Sabha elections, will make the market shoot up to all new record high levels. Or if any unstable government forms, or in the event of a hung parliament, that is a parliament in which no political party has enough seats to secure an overall majority, then the market would crash up to 5 to 10% in a very short term. But what is going to happen? The ruling party is going to win or the ruling party is going to lose will remain a mystery until June 4. Hope you enjoyed this video and share this video with your friends who are investing or going to start investing. If you want to know more finance content, then subscribe to our channel, and if you want to know about any specific topics to know, then put it in the comment section. Thank you so much. Have a great day.